What is going on, investors? Hopefully you guys had a great day out there. Time to talk about FedEx Corporation, ticker symbol FDX. Over the last year, stock's up only 174%, but year to date, basically flat. So if you wanted to get into this one, you might be wondering, well, maybe now's the time. Got a 1% dividend yield. We paid $2.60 per share. We've only got about a 15 PE ratio. We'll talk more about the ratios. Here's the first thing I wanted to talk about with FedEx. We're going to jump into the numbers. We're going to dissect the revenue, the expenses, and things like that. Take a look at the profits. But I just wanted to show you something very quickly here. Diluted earnings per share in this quarter, which is just phenomenal. Just a great quarter, as you can probably imagine. $3.30. Now we see here for the 9 months, so that's 3 quarters basically, $12.55 in earnings. That's up 100% over last year, and they're paying you a measly $2.60. Now, look, it's still fine. It's still 1%, which, in interest rate environment, even that we're in now with increasing rates, it's not that bad. But here's what I wanted to show you. Okay, FedEx declared 50-cent dividend. This was back February of 2018. They bumped it to the 65 cents 3 months later. This was the last time they increased the dividend back in 2018. They've paid 65 cents, 65 cents, 65 cents. They bumped it up. 65 cents. So they haven't raised the dividend in 3 years. And the last time they raised it at this 50%, it was actually a 30% increase. This was a 30% increase. So will they raise the dividend? I would expect that they will at some point. And when they do, it probably will be a rather sizable increase, because when we dissect these earnings, they're phenomenal, and they certainly can support more of that in the future. Now, I just wanted to point that out just in case you needed another reason to buy this stock. Now, they just reported their fiscal third quarter, and obviously holiday package strength just absolutely blew it out of the park. If you're like me, you're in the e-commerce business, they were like putting limits on how much packages you could ship out, because they had so much demand for their service. They were doing surcharges and everything. Now, what I wanted to show you here was just kind of an apples and apples comparison to UPS, because I think it's a fairly fair comparison. They have slightly different business models. They do slightly different things with owner operated versus kind of franchise model, but you get the picture. They both deliver packages. That's how they make their money for the most part. You see, UPS always trades at a premium, and right now it's about a 0.7 spread on that, and that's actually pretty wide. This spread between the two companies is actually pretty wide, and I think what you'd expect at some point is either UPS's valuation is going to come down or FedEx is going to rise a little bit, because you've seen it's been a little tighter here at times. It's always been a gap, so I would never expect FedEx to overtake UPS, at least in the shorter term, but this gap is relatively wide, and that could be signaling a change at some point. Now, let's jump into the numbers. These numbers are amazing. So we've got 3 months ended here. February of 2020 ended February 28th of 2021. We've got our 9 months ended here as well. As you can expect, things are going absolutely phenomenally, because you got e-commerce and things like that. Now, take a look. Just across the board, everything is growing over at FedEx. Total revenues up 23% over the last 3-month period. We went from 17.5 up to 21.5 billion. You see, it holds true for the 9 months as well. As you can imagine, most people sitting at home, they were buying stuff on e-commerce sites. That's up 18% over the last 9 months. Now, key thing here, what happened to our operating expenses? They obviously had to rent more trucks. They had to buy more trucks. So they had to spend a lot more money to get this revenue, and they did a nice job. We see total operating expenses here actually up 20%. So when you grow your total revenue by 23 and you only increase your operating expenses by 20%, look, that's probably going to create some bottom line growth. And we'll see that in a minute. We see for the 9 months, we went 15% growth on our operating expenses. But again, we grew our top line revenues by 18%. That means a lot of money is going to flow down into the operating income side. So here's our operating income side. And we went up Oh, just 145%. This is a really, I don't want to say this is like an old company, but this is a pretty mature business, okay? To grow your operating income by 145% over the last year is just amazing, up to $1 billion. If they can somehow continue that type of growth, boy, oh boy, the stock is criminally undervalued. We see for the 9 months, it holds true here, 109% growth, went from $1.9 billion up to $4 billion. This is operating income, okay? Operating income, $4 billion for 9 months. That's absolutely phenomenal. Now, we come down here, we got to pay some taxes, some interest, things like that. We get down here to this diluted earnings per share. This is what I kind of kicked the video off with. We made $30.30 per share in the quarter. That's up 175% when we made $1.20. We see for the 9 months, same thing holds true. We're up 103%. We made $6.17 and we made $12.55 for the 9-month period. Again, I showed you their dividend rate per share is $2.60 per year. We see even last year, look, they were making $6. Okay, I know this is a company that has to do heavy investment. They have to buy more trucks. They have to rent stuff. They have to buy fuel, maintenance, blah, blah, blah. But look, this is still very, they can well exceed coverage on this dividend, and now they're really exceeding it here. So, is a dividend raise coming for FedEx shareholders? I would actually expect one at some point, and if they don't, I'd be a little upset about it, honestly. So we've got cash and cash equivalents here. That's up. Receivables up, everything looking good here on the balance sheet here. We're up actually quite a bit, about $9 billion on the asset side. Let's come down to the liability side. Total long-term liabilities, really not a whole lot here. We've got a little bit of long-term debt on this one as well, but it didn't really tick up that much over the last year or so. So they didn't really draw down on their credit facilities like a lot of other companies did. So because they really benefited from people staying at home, so they probably didn't see a need to do that. Everything looking good there. And as you can imagine, when you're flowing that much money to your net income and your operating income side, cash flows are going to be phenomenal at this company. Take a look. So we've got our operating activities up here. We pull down that net income, that just phenomenal net income. This is for the 9 months. So we pull down this $3.3 billion. We get to add back in some depreciation. Cash flows, just came in at a light $7.4 billion. That's basically double where we were, more than double where we were a year ago. We see net cash used in investing activities, basically actually down a little bit. So they invested a lot in their business, but it's not any more than they did last year, at least from a cash flows perspective, and they grew their top line cash here by a ton of money. We see here they did a little bit of stock issue, a little bit of debt issuance, but man, a little bit of principal payments on this debt. We got this dividends paid a little bit, but boy, they could grow. I mean, look, they're clearing $7.4 billion in 9 months, and I don't want to say only, but they're only paying $513 million in dividends, meaning they can really increase this dividend if they think these 9-month period going to continue. And I think there's probably some question marks. Maybe people go back to shopping at brick and mortar retail. That, maybe e-commerce sales, they don't necessarily increase as much as they did last year. I think you could definitely make those arguments, but I think they have a very strong business. Now, last time we talked about FedEx, I think they created this gap here. This stock kind of gapped down a little bit on earnings that were seen as kind of a disappointment. And boy, it ran up, didn't completely backtest the long-term trend line, and then really failed, really got rejected down in here. Made some lows in the stocks down here, 240, about $240 per share. But we've been kind of locked into an uptrend in this one really since the beginning of February. And this trend line, I have a line marked out right here. This line right at $273 per share. That's about where the stock is trading at today. In the after hours, we're actually up a little bit in the after hours on this stock. So I wanted to show you this horizontal line at 273. This is about where the stock is trading right now. That would keep the shorter term uptrend that we've had in February in place. And, in my opinion, you probably could walk this stock up to $290 per share pretty comfortably as long as that trend line stays in place. Any pullback into the 260 range, I think, could be your first stop on this one. First one where you'd want to get in on a stock like this. What you want to do really just depends. Personally, I would want to capture a lot of this. So I honestly would do a tag team. I would actually buy both these stocks. I would buy UPS and FedEx because I think they're both tied together. So I would, I would actually want a little bit of both of them. I think FedEx has tons of rooms to grow this dividend. Whether or not that's something management wants to do, it doesn't necessarily, again, they haven't raised the dividend in about 3 years. So you'd expect maybe that is coming. From a forward PE basis, this stock is very reasonably valued. Everything lines up. This is a long-term kind of buy and hold investment. $70 billion market cap. I tell you what, there's companies that are flimsy as heck that are trading at a valuation that is close or exceeding that. This is a solid company. I like what we got going on here. So that was FedEx Corporation. Hopefully you guys enjoyed this video. Obviously, we're kicking earnings season off on this channel, so hit that subscribe button and that like button if you want to see more videos like this in the future. Thanks for tuning in. Good luck with your investments.